8th of March, and just getting back to it over here. I've been gone for a little while. I was out for spring break. Tried to do a webinar while I was on spring break, but I wasn't getting good internet service, so I just took the time to simply enjoy the sun and the beach with my family and not do anything work related. So anyway, back now. Came back to a very different place than we left. So it certainly is interesting to see how things have changed so rapidly and steps that are being taken to contain this viral outbreak. I'm not going to go into my thoughts on all that. I'll just simply pop over here. We'll talk about the markets. There's tremendous opportunity. I've seen some people that have done well. I mean, it's both sides of the coin, right? You've got those that have gone almost broke over what's occurred here over the last few weeks with the market spiraling down, and you have those that have taken advantage of that and have made tremendous gains on that. So if you've missed out on the first part, or maybe you've made bad decisions on the first part, it's not too late. Put together a trading plan, follow your trading plan. Things will come together for you. It's when we start getting outside of that plan and trying to trade from what we think should happen or what we hope should happen that we start creating situations for ourselves where maybe we're not fully taking advantage of the opportunities that are there. And right now there's a ton of volatility, ton of opportunity there. There's a guy, there's a couple of options traders that I know that have just done amazing things. So anyway, we're gonna pop back over and have a look at the markets. Again, I'm kind of my take on all of this is nothing's urgent. Like I said a couple of weeks ago, when we first were getting started with this, if the volatility scares you, and you don't have to trade, you don't have to click the button, you don't have to take any action at all. Just wait it out, hunker down, wait it out. However, with volatility does come opportunity. So we're going to talk about that. We talked last time about breakout trading. So this time, as I run through the levels, I'm going to talk a little bit about playing the bounce. And I'll get more into it tomorrow. This is really my first day back looking at everything. So today I'm just going to talk about levels. I'll talk briefly about the bounce, what it is, and then we can get into depth on more of like a bounce play with our actual session tomorrow. And then next week, I want to talk about an even different trading style that's kind of a combination of that breakout and looking at intraday trends and whatnot. So anyway, let's go ahead and get to it. I'm going to start with the futures market. Then we'll have it a Forex. I don't even know what word that was. We'll start with the futures market. Then we'll head over to Forex, talk about what's going on there. Then we'll have a look at the two cryptocurrencies, just ETH and Bitcoin. Then I'll have some feedback on a couple of the trading tools that I've been utilizing and looking at as well, and kind of where they are. So with that said, let's go over to this screen right here, and we'll have a look at the futures market. So starting top left-hand side, we'll have a look at the E-minis. So this is the ES, it's the S&P E-minis. As we know, this has just been on a cliff, straight off a cliff here, and even last week, there were some measures by the federal government put into place that hasn't really stopped the bleeding. So I think everyone can agree we're in a downward trend right now. So the 4 hours is a downward trend. Had a number of days where trading has been stopped. We can see the little yellow dots here where trading has been stopped because of the market has fallen or in some cases risen more than a certain percentage in those during this trading hour. So anyway, trading was actually halted earlier today because we had a large percentage drop. And now this morning, coming into the regular trading hours, we're having a little bit of a push, looks like, off of this 2400 level. So What we can look at here, our key levels on a 4-hour time period are actually whole numbers, 2,400 and 2,500. We've been in this range really since yesterday. We can even see it since Monday, Monday. It was also held up here after we had those big gaps from off hours trading. And Monday it even kind of held in the same range here, with 2,400 being bottom, really 2350 if we look at where it was Tuesday or Monday, and then yesterday, Tuesday. My days are all mixed up from being away. We can see that 2350 was really kind of that bottom edge, but 2400 is where we've seen most of the play, right around that whole number. So talking about bounce trades, we know what a breakout is. We talked about breakouts, in which case we would set a level below where we currently are and look for momentum to carry us through that in order to take a trade. A bounce does the same thing. We would look at key intraday levels, and here on the 30-minute you might even consider this 2450 as an intraday level. But ultimately what we would do is we would look for key areas like this 2500, 2525 has been held up as a key area. So we're in a downward trend currently. So what we would do to play a bounce as opposed to a breakout, a bounce would say, well, we're going to wait for it to pull back to a key area, and then we're going to trade it with the trend. So in this case, the trend is down. We would wait for the price to pull back to 2450 potentially here on the 30-minute, maybe even as high as 2500, and then you would sell off of that level to take it short. And then obviously you've got your stop losses. You want to put a stop loss in there, base it on something around what the intraday trading range actually is. Don't just pick an arbitrary number of points out of the top of your head. Base it on something that's realistic, and then size your lot, the number of lots that you're trading, based on that. So a bounce trade just simply means we're playing a bounce. We're in a trend in a certain direction. We wait for price to pull back to a key area, and then we either buy or sell off of that. So if we're in an upward trend, we would pull back short and then buy off of it. If we're in a downward trend, we'd wait for it to push up, and then we would sell off of that new key area. So in this case, if we're playing a bounce on the ES, we would wait for price to pull back to this key area 2500, then we would look to sell off of that. So that's a bounce trade. Does it have any benefit over a breakout? No, they're just different ways of approaching the market. Both have their merits. The challenge, as I mentioned before, breakouts I feel like are really good for, really I think they're really good all the way around, because A, you're trading with the trend still. B, you're waiting for momentum to happen. C, when you have that momentum that carries you through that breakout area, psychologically you're seeing confirmation of a move. With a bounce trade, you're having to sell into a big red candle or buy into you're having to sell into a big green candle or buy into a big red candle. So psychologically that can be tough, because if you're back over to here, if we're waiting for a push up to 2500 to sell it, we're going to have green up to 2500, and now we psychologically have to go counter to what is happening there and then be able to sell off of that area. But still a very viable trading plan, because you're basing it on key areas that have been have most likely held up through different time frames. So very viable trading method. Of course, just like anything else, you're going to be wrong, and that's why we have to put stop losses in there, so that when, not if, when we are wrong, we don't take massive losses that offset our gains. And then from a take profit standpoint, you would look to the next level down as your profit point, and hopefully you'd want that to at least be 1.5 or 2 times greater than where your initial stop loss is placed. All right, so let's go ahead. We'll run through the rest of the market real quick, and then I'll let you guys get on with it. I'll do more tomorrow, more in depth on actual bounce trades, but that's the overall gist of it. It's pretty basic, but like with anything else, it just provides you with that nice, basic, simple plan that you can execute the same way every time. All right, so over to crude. Looking at crude, we've just been tumbling here as well. As we mentioned, a couple of weeks ago before we left on vacation, the thought always is, well, how much lower can we go? And my answer is as low as it needs to go. No one knows. It can keep going. There's really, we're in the middle of a trade war right now, oil trade war, and that's pushing prices lower, as well as a reduced need right now with everyone being kind of across the world self-quarantining. We're using less and less petrol, so as a result, we have price continuing to fall. So we're in a downward trend here on oil. So if you're, we can look for key areas, and if this were to pull back to 27, that's a great area for playing that bounce trade. We can see how 27 had lined up here as support, finally broke through it. It became resistance. It pulled back to 27. Now it's continuing down. We're down at 24. So really big, I guess not 24, 25. So 2-point drop just over the course of off trading hours. So if this were to pull back to, and you can look intraday basis, you've got 26 as well. 27 is closer to where that prior close is. So if it were to pull back to 26 or 27, playing a bounce, great areas to play that bounce and look to sell off of that to continue to trade with that trend. Gold is also 4 hours in a downward trend. 30-minute, it's kind of choppy here. We had a little bit of a run yesterday. Right now we're coming back to a key area here right around 1500. So I really have trouble wanting to short gold, especially right now. I know that last week prior, we saw a tumble in gold, and talking to a few folks, it really sounds like a lot of that might have been driven by folks pulling money out of metals in order to cover other trades that were here in stocks, other options trades, other instruments that they might have been trading. Hanging around 1500 to me seems like a great spot to actually buy that bounce, although that is a very much a counter trend trade. So if you're looking to trade with the trend, we would look for this to pull back up here to 1520, 1525, and then sell off of that. That's actually trading with the trend, would be waiting for it to pull back and then selling off of it. Although counter trend trade, right here, 1500, great spot in my mind to actually go long and only take a couple of points of risk here, having your stop down below 1490 and see if it doesn't push back up longer. But that's a counter trend trade. By the way, folks have asked a little bit. I know a lot of folks that watch this are Forex traders, and don't always have accounts that are of the appropriate size to trade with minis in the futures market. There are micro accounts. I put some on here just to bring them up to you guys. It require much less margin and allow you to still take advantage of the volatility that's occurring here in the futures market. So there's micro accounts. MES is the micro E-minis, MGC is the micro gold, MNQ is the micro NASDAQ. And then of course you've also got here the MYM, which is the Dow Jones micro size, and then you've also got the Russell up here. There's not a micro oil. If there is, I didn't find it. But at least trading E-minis, NASDAQ, gold, you can trade those on micros, which require much lower margin, and could probably trade those with a $2,500, $3,000 account. So just as a quick heads up. All right, so getting that out of the way, let's pop over to foreign exchange. Over here in Forex, still using the same process, which is watching for a couple of things to occur. One, looking for strong currencies versus weak currencies in order to be able to trade what's actually moving. So use a currency strength meter in order to see which currencies are viable potential trading opportunities. But then I also, and I'll make this, actually I don't think, my other screen always gives me that messed up view. So let's do this, and I'll pull this over here like this. So still doesn't do it right, hang on. All right, let's do this. It doesn't come all the way across. Dang it. I don't know what is up with that. Anyway, the other thing I consider once I look at that is I also run through and I look at the intraday range. So what's the current range as it compares to the averages? And as we can see, looking across here, many of our more active currencies, the pound cross pairs like the pound USD, pound CAD, pound yen, euro yen, those cross pairs have actually moved quite a bit in relation to what their average typically is. It looks like there is a little bit of opportunity. The only one I really see here that's got some opportunity, there's potentially the US yen, although that's a pretty heavily correlated pair. We've moved about 100 pips. Averages has been anywhere from a low over the last 30 days of 140 up to a high of 200. So there's potentially some opportunity to look at a breakout here on the US versus the yen. Also here on the euro versus the yen, it's only moved 85 pips, and the averages are much higher as well. Just let's see if I can take this back out. So euro versus the yen, US versus the yen, neither of them are really moving. So even though we have a low intraday range of where they've currently moved, they are all, the euro yen, the US yen is always pretty correlated, but the euro yen as well today is staying in that pretty tight range where they're moving kind of in lockstep with one another. Although with that said, still opportunity there if you wanted to look at a potential breakout on one of those, just simply from the fact that it has not exceeded its typical range. So there may be some opportunity, although we can see here over the last bit it's been moving just right with one another, and there's not really a whole lot of opportunity there leading up to it. But if we do see that euro and that yen really start to diverge from one another, or even the US from the yen begin to diverge from one another, there could be opportunity there for us to take that breakout trade and see if we've got opportunity. So like right now, the euro versus the yen, both are starting to push down, but we look at where our volume detail is starting to line up, and it looks like it's continuing to give us some indication that there may be shorting opportunities here. So if that's the case and it doesn't roll over to a buy, we could look to trade this short. Let's just see what that looks like on a little longer term scale here. Now, even on a 30-minute, the trend is down. So, we could look at that and just put an order on at the bottom of that. And if it doesn't fill it, we just close it out and move on. If it does break through and fill it, maybe we have opportunity for that to continue down and continue on with this current range. So I'm going to do that. I'm just going to leave it on there. Even though it's not great from a setup perspective over here on the currency strength meter, there is opportunity left. We've moved 85 pips on an average of, the smallest average 140 pips, larger because of big intraday moves recently. We're looking at 200s, but probably that 130, 140 range is about where we'd want to be on it. So if it breaks through and it breaks back short, great. We'll take it. If not, then I'll let it be and let it sit out there. As far as the crypto market goes, let's see what I've got over here. Crypto market has just been, just like others, it's been off that cliff in both of these. Although, with that said, we are setting up a bit of a range here. So on Bitcoin, for example, we're seeing kind of a support down here at 5,000 and resistance up here a little higher at 5,600. So trading kind of within that range right there. Looks like some opportunity. Previously, 5,200 on a 4-hour was this bottom, and it's broken it. We can see where it broke through it here. It came back, is retested it, pushed back down, broke it, and now it's seen that as support. We've just closed below it again, and it looks like this 5,200 is resistance. So, opportunities to continue to trade with that trend would be selling off of either a pullback to 5,200 or letting it break 5,000 and taking it short from there. Same with Ethereum. If we look here at Ethereum and look at where we are, we can see that 120 was a support area for us, support, broke it, came back to retest it, and now it's been pushing lower. So, pulling back to 120 would be an opportunity to sell off of that, or waiting for a breakout lower off of 110, which is right here where we can see this has been setting up, looking for it to break through 110 and then taking it short from there as well. Opportunities to trade with that current 4-hour trend. So anyway, that's what we're looking at for the day. As far as CrystalBot goes, I came back. This was a little eye-opening for me. The account drew down by a little over half while I was gone. So it looked like it took loss as this market really fell off here again. And so that certainly has put me into a negative situation from this bot. So that's where we are there. From the Neurotech side of things, really like the software. Although those of you that had purchased Neurotech, I just refunded everybody. There's a couple of folks that asked for a refund, but then I refunded everybody yesterday. Ultimately, I think it's better if I'm not the middleman on it. I love the software and I love Kostya, but I think what I'm going to do is I'm going to send you guys that had purchased a link to buy it directly from Kostya. That way I'm not in the middle trying to wait for updates to be done, or being that middleman when you have an issue, sending it to me, maybe sending it to him, getting it back, and it's just a big lag in service, and I don't think that's fair to everybody. So what we're going to do is set up a way that you can buy that directly from him and participate in it, and I'll still talk to it every day and look at opportunities here, because I'm using it and I like the software, but it's not being the middleman. I don't think is the best from a service aspect. So I'm going to step out of the middleman and send you guys a link to be able to get it right from him. So that's what we're looking at there. So I think that's everything. I covered it all. Haven't gone a crazy long amount of time. Have hit all the markets. We've talked about what's happening in futures. For those of you that have smaller accounts, you want to look at micro futures. I talked a bit about that. We talked about the bounce versus the breakouts, which we've discussed previously. We talked about Forex. We talked about crypto. So I think we've hit it all. If you have any questions, shoot me a message. You can talk to me on Facebook. You can talk to me just support at makemoneyfromyourlaptop.com. Either way, here to help. And by the way, right now a lot of folks are being quarantined to homes. If you're not trading, there's other ways to make money from your laptop. You can do affiliate things. You can start building out a blog and working to build subscribers. And once you have subscribers, that's a way that you can leverage those subscribers to generate income as well. That's all part of the Make Money From Your Laptop website. I have full trainings on those out there. Now is a great time to get started with it. You're at home anyway, probably. Why not learn something new? Real estate. There's some real estate that can be done from home as well. And unfortunately, I think real estate is going to be especially tax liens and foreclosures and whatnot, coming out of this viral issue. I think there's going to be some opportunity in real estate. It's an unfortunate opportunity because it's going to be driven by folks losing assets because they're not working. But at the same time, there's going to be opportunity there as well to make money off of those. I'm not saying we need to make money off the backs of people that are in trouble, but the government, especially tax liens, they'll be they want their tax money. They'll be leaning on properties, and even if they're not losing the property, you can buy that tax lien and get earn some interest on the lien when it's repaid. And if it doesn't ever get repaid, then it puts you in a position to be able to foreclose on that property and take other measures as well. So that's even out there on the Make Money From Your Laptop page. So there's a lot of things that you can be looking at and learning about right now. Don't just sit on your hands worrying about what's going to come tomorrow. Take action to create a better tomorrow. All right? So anyway, that's it. Have a great day. We'll talk to you later. Stay safe.